Hello student, this is Palla Darbari, your host, and you're watching Palla Darbari classes. In this video, we will discuss national income, and the method to calculate the national income that we will discuss in this video is value added method. We will see the precautions regarding calculation of national income by value added method. At the end, we will discuss the numericals related to the value added method. Let us see the definition of the value added method. Listen, the value added approach measures the national income by estimating the contribution made by each of the producing unit in the economy to the total production within the domestic territory during the accounting year. Listen, in the value added method, or under this value added method, the national income is calculated on the basis of the contribution made by producing units in the economy to the total production within the domestic territory during the accounting year. So under the value added method, only the contribution should be considered. Let us go in detail and let us see what we do under the value added method. We know that the production process involves different stages of production. The production involves the use of various factors inputs, land, labor, capital, entrepreneur, as well as non-factor inputs such as raw material, transportation, etc. is used for the production of the commodity. The use of such factor inputs and non-factor inputs in the production is called intermediate consumptions. With the use of inputs, the goods undergo transformation and thereby the value is added at every successive stage of production. So under the value added method, only the added value in the successive stages of production is considered. Value added is different from the total value of the output and the total value of the intermediate consumption. The question is how the value added is different, because value added is equal to total value of output minus total value of intermediate consumption. Under the value added approach, the two components are the total value of output and the total value of intermediate consumptions. Let us see what is value of output. The total value of output refers to the monetary value of all the goods and services produced by all firms during the accounting year. Algebraically, it can be calculated as quantity sold multiplied by price per unit. Sometimes it might happen that the actual demand in the market is less than what the firm has estimated. In other words, we can say that sometimes the sale is less than what we had expected. Then some of the output produced remains unsold. Such unsold output added to the firm's stock or the intermediaries, which is called closing stock. On the contrary, at times it might happen that the actual demand is more than the estimated demand. Therefore, the firm has to take the stock and sold the goods from the stock, and by doing this, the stock get reduced, because sometimes the producer has to add the goods in the stock and sometimes the producer has to take the goods out of the stock. Because of this particular reason, at the time of calculating the total value of output, the change in stock is duly considered. When I say total value of the output means sales plus change in stock. Now let us see the second components, that is intermediate consumption. The value of the intermediate consumption refers to the value of all the non-factor inputs or secondary inputs that are used in the production process. Try to understand it through this table. We presume that in the economy, the four are the production unit: cotton fiber farmers, weavers, textile industry, retailers. Value of the output is, that is sales plus closing stock. The value of the output for the cotton firm is 500. Value of the output for the weaver is 700. The value of the output for the textile industry is 900. Retailers 1100. And the total value of the output is 3200. The value of the intermediate consumption is 100 for the cotton fibers, 500 for the weavers, 700 for the textile industry, 900 for the retailers. So the total value of the intermediate consumption becomes 2200. Under the value added approach, what we do, we only consider the value added. The value of the output for the cotton firm is 500 and the intermediate consumption is 1. So the value added for the cotton farmer is 400. For the weaver 200. For the textile industry 200. For the retailer 200. So the total value added becomes 1000. Under the value added method, only the total value added is only considered. I mean the contribution made by the cotton fibers, weavers, textile industry, retailers is only being considered. While considering the contribution made by cotton fibers, weaver, textile industry, retailers, the problem of double counting is solved. We can see over here, in the case of the cotton farmers, here the total is 3200, total of the intermediate consumption is 2200. Remember one thing, in 3200, the value of 2200 is already being added. When we remove the value of the intermediate consumption from the value of the output, we get the true value of the goods, that is 1100. That is 1000 only. How? Suppose the value of the output for the weaver is 700. Earlier the cotton farmer has sold the product at 500 rupees. The weaver sold the product at 700 rupees. Remember one thing, under 700 the 500 is already being added. So if we remove the 500 from the weaver's value of the output, we get the true value of the goods. So under the value added method, we only consider the contribution. And by deducting 500 from the weaver, the problem of the double counting is solved. Because under 700, 500 is already being added. So under the second stage, we only have to consider the value which is being added. Because 500 is already being added under 700 rupees. That is the main reason from the total, that is 3200, 2200 which is being included under it being excluded, and by excluding 2000 from 3200, we get the true value of the national income. So under the value added method, we consider the value added, not the value of output. The formula to calculate the national income under the value added method is value of output minus intermediate consumption. Now let us see the precautions that is duly considered while calculating the national income by value added method. The first thing that we have to consider while calculating the national income is the value of the sale and purchase of the second hand goods are not included in the national income of the current year. The question is why? Because the value of these goods was included in the national income. The value of these goods was included in the national income in the accounting year in which they were produced. Second precaution which we have to keep in the mind is, although the second hand goods are not included in the national income, but the brokerage commission paid to facilitate the sale or the purchase of these goods is included. Why? Because it is the paid income, because the effort has been made. The next precaution which is being duly considered is only the value of the final goods and services are included in the estimation of value added, and the value of the intermediate goods are not included. Why? Because the value of the intermediate good is already reflected in the value of the final goods. That is the main reason we only consider value added. We never consider value of the output. The reason is the intermediate good is already reflected in the value of the final goods. The next precaution which we have to keep in the mind is, at time the producer firm keeps a certain portion of the output for self-consumption. Such a portion of the production that is remained for self-consumption should also be included. Why? Because it is the output. Similarly, the imputed rental value of the owner-occupied house land should also be taken into account. Because all the houses, whether owners occupied or rented, have a rental value. Last precaution is some of the services that are meant for self-consumption, such as services of the housewife, father teaching his own son, are not included in the national income. Why? Because it is very difficult to estimate the market value of such services. Now let us see the steps that we followed to calculate the national income under the value added method. The first is we have to consider sale. Under the sale, add change in stock. Change in stock means closing stock minus opening stock. After considering or after adding change in stock in the sales, one will get value of output. From the value of the output, intermediate consumption is deducted. After deducting the intermediate consumption from the value of the output, one will get GVA. GVA means GDPMP, gross domestic product at market price. We know national income means NNPFC. What is national income? NNPFC. So by applying the value added method, we will get GDPMP. Now we have to apply this concept that is Germany ne nahi di mujhe Ferrari, and convert this aggregate into another aggregate, that is NNPFC. How to convert it? Firstly, G should be converted into N. How we can convert G into N? By deducting depreciation. Then what we have to do? We have to convert D into N. Second components, D into N means we have to add NFIA. Then finally, we have to convert MP into FC. To convert MP into FC, what we have to do? We have to deduct net indirect taxes. Net indirect taxes means indirect tax minus subsidies. Then finally, we will get national income, that is NNPFC. These are the steps that we have to follow to calculate national income through the value added method. Please consider it. Please go through it. I repeat the same thing again. Sales plus change in stock, we will get value of output. Then we have to deduct intermediate consumption. We will get GVA. GVA means GDPMP, gross domestic product at market price. From the GDPMP, we have to deduct depreciation. We have to add NFIA. We have to deduct NIT. Then we will get the national income. Take the example and try to solve the numerical. This is the question which is being given to us. In the question, indirect tax is given, that is 20. Sales is given 2000. Closing stock 300. Consumption of fixed capital means depreciation, that is 200. Subsidies 100. Purchase of raw material 1000. Export 200. Import 105. Rent 500. Listen, export means sales, import means purchase. But here in the question, sale is given. It means total sale is given to us. When the total sale is given to us, it means that we don't have to consider export. If the individual sale is given to us, what it means? It means sale to A, sale to B, sale to C. It means individual or the breakup of the sale is given to us. Then we have to consider export. In the same manner, import means purchase. In this question, purchase is written. It means total purchase is given to us. If the breakup of the purchase is given to us, then we have to consider import as well. Clear? Consumption of fixed capital means depreciation. What we have to do? We have to find out GDPMP, GVA. Firstly, we have to draw the format, and after drawing the format, we have to put the value. The very first thing that we have to do is we have to do what? We have to write down sales. What is the value of the sale? Here we can say the value of the sale is 2000. After that, what we have to do? We have to add change in stock. What is change in stock? Closing stock minus opening stock. Closing stock is written over here, that is 300, but the opening stock is not given. So change in stock will becomes 300. How? 300 minus 0. Since the opening stock is not given, If the opening stock is not given, it means 300 minus 0. So change in stock becomes 300. We will get value of output. What is the value of the output here? 2300. From the value of the output, what we have to do? We have to deduct intermediate consumption. Intermediate consumption means purchase of raw material. In this question, the purchase of the raw material is 1000. What is the purchase of the raw material? That is 1000. So here we can say we deduct 1000 rupees from 2300, and after deducting 1000 from 2200, we will get GVA, that is GDP MP. What is the value of the GDP MP over here? 1300. Let us see. I hope the point is clear. I repeat the same thing again. According to the format, firstly what we have to do, we just draw the format. Sales plus change in stock, value of the output minus intermediate consumption, GDP MP. Then read the question and we have to put the value under it. Try to solve another question. In this question, what we have to do, we have to find out NDP MP or NVA. Remember one thing, here V means D. So whenever NVA is written, it means net domestic product at market price. In this question, indirect taxes is 20, sales 2000, closing stock 300, depreciation or consumption of fixed capital 200, subsidy is 100, purchase of raw material 1000, export 200, import 105, rent 500. Firstly, we have to consider sales. What is the value of the sale over here? The value of the sale is 2000. We can write on over here. Now what we have to do? We have to add change in stock. Change in stock means closing stock minus opening stock. Closing stock is 300, opening stock is 0, so 300 minus 0 is 300. Then we will get value of output. Here the value of the output will become 2300. How? 2000 plus 300 is equal to 2300. Then what we have to do? We have to deduct intermediate consumption. Here the intermediate consumption is purchase of raw material, that we can see over here. We will get GVA. What will be the value of the GVA? The value of the GVA is 1300. In the previous question we have seen. Afterwards we have to apply the Germany ne nahi di mujhe Ferrari concept. What we have to do? We have to convert G into N. To convert G into N, what we have to do? We have to deduct depreciation. We will get NDP MP, that we have to find out. I hope the question is clear to everyone. Try to see next question. In this question we have to find out NVA FC. NVA FC means NDP FC. It means domestic income. Here the sale is written, purchase of machinery is given, import of raw material, depreciation, subsidies, purchase of raw material, export, sale tax, excise duties. Listen, sale is written. It means total sale is given to us. So we don't have to consider the export. Under the intermediate consumption, we only consider the price of raw material. We never consider price of machineries. Fine. So here the purchase of the machinery will not be considered. Why? Because it is not the intermediate consumption. Intermediate consumption is purchase of raw material. Remember one thing, here the purchase of raw material is written and in the import of raw material is also written. Since the total purchase is given to us, so we don't have to consider import. Clear? Because import is already being considered under it. Purchase of raw material. Sale tax, excise duty means indirect taxes. So sale tax and excise duty together makes the indirect taxes. Let us draw the format first. Firstly, we have to write down sale. In this question, the sale is 450. So we have written 450 over here. Then what we have to do? We have to add change in stock. Here the closing stock is not given. Opening stock is not given. So change in stock is dash. We will get value of output. What is the value of the output? 450 itself. Then we have to do what? We have to deduct intermediate consumption. Here the intermediate consumption is, that is 200, that we can see. We will get GVA. What is the value of the GVA that we get? The value of the GVA is 250. Here we can see. Afterwards, what we have to do? We have to apply the Germany nahi thi mujhe Ferrari concept. Why? Because we have to find out domestic income. Firstly, what we have to do? We have to convert G into N. To convert G into N, what we have to do? We can see over here, we have to deduct depreciation. We will get GVA or NDP MP. Then what we have to do? The second thing that we have to do is we have to convert MP into FC. To convert MP into FC, what we have to do? We have to deduct indirect taxes. What is indirect taxes? It means net indirect taxes, sorry. So what is net indirect taxes? It means indirect taxes minus subsidy. Here the indirect tax is 35 plus 20 and the subsidy is written over here. What is the value of the subsidy? 40. So 25 plus 35 minus 14, it will be 15. So we will get domestic income, that is 210. I hope the question is clear to everyone. Now let us see another question. In this question we have to find out value added. Now we have to find out the value added of the firm A, firm B, and collectively called gross value added. Individually value added, collectively gross value added. Fine. So we have to find out the value added of the firm A, value added of the firm B, and we have to find out gross value added. Okay? Total means gross value added. Total of the value added means gross value added. Here let us see the information. Under the information, sales by firm A is written. It means total sale of the firm A is written. In the case of the B, breakup is given. Sales breakup is given. Total sale by the firm B is not given to us. Here we can say sale by the firm B to firm A. It means firms B sale and firms A purchase is given. Firms B sale and firms A purchase. Change in stock is given directly. Export of the firm A should not be considered. Why? Because the total sale is given to us. Import because the purchase information is not written, so it means import and the purchase both are the same thing. So under the purchase we have to consider import. Import of firm B is 10. Another purchase is this one, that is 100. Sorry, 35 for the firm A, and for the firm A another purchase is 100. So the total purchase in the case of firm A is 135. In the case of the firm B, purchase is 90. Net indirect tax is given, that is 20. Depreciation, that is consumption of fixed capital, is 10. NFIA is written in negative. Wages, rent, it is being given. To find out GVA according to the format, let us see. Firstly, we have to write down sales. Sale is, we can see 300. We can say 300 is written over here. Then firm B, sale is this plus 100 plus 50. 150 is written. Change in stock is 50-50 that we have written over here. The value of the output becomes 350. Here 200 and here become 550. Now we have to do what? We have to deduct intermediate consumption. In the case of the intermediate consumption, we can see for the firm A, the intermediate consumption, that is purchase, is 100 plus 35, 135. For the firm B, intermediate consumption is, we can see over here, 10. Total is 145. So GVA will become 215, 190. So the value added for the firm A is 215, for the firm B is 190, and the gross value added is 450. Gross value added is for the total. Clear? I think the topic is clear to everyone. Here we can say the total is 405. That's all I have in this video. Thanks for watching. God bless you all. Dear subscribers, if you have not subscribed my channel, please subscribe the channel and don't forget to press the bell icon so that whenever I upload the new video, you get the notification.